morning, good afternoon, and good evening, traders from across the globe, and thank you for tuning in to my 2,233rd edition of Short-Term Trading Live with Oscar Carboni, and that's the home of Stops Are In. Emotions are out. Traders, you better keep your emotions out of these crazy trades in these markets. They've been going berserk lately. Make sure you put your stops in first. You never trade without stops. Know the risks behind this game and say that to yourselves over and over again. Stops are in, emotions are out. It'll help. So, let's get moving. March 5th, 2021. It's a Friday. Video number 2,233. And what is on the board? Traders, bonds going lower produces higher interest rates. Higher interest rates has produced both capitulation and flat top formations all over my charts. I'll show them to you. Flat tops produce market drops. How about that? And now I'm taking a bow for my last video, kids. I'm sorry. There's nobody out there like me. I'm taking a bow. Because I came out with that video and said, listen, flat tops produce market drops. We've got a flat top in NASDAQ, and we're bam, down we started to go. Another flat top has joined in. Transportation average. I will show that to you. But hey, wasn't that a great call? Now, we didn't actually get, we've done well so far this week, but we didn't get filled on Thursday where we wanted to get filled. We had to wait all darn day, and then we were only able to take like 20 points out of the market, but still not bad. Hopefully for Friday, we'll sell near the highs and let this thing crack for 40, 50, 60 points and jump out of the S&P down there. We'll see what's going to happen. But I've got some great charts to show you. So, again, we've got things that look like capitulation. We've got flat tops. These are all things that make the market go down, right? You've got interest rates moving higher. That is going to be scary. Let me tell you right now, kids, hold on just a moment. Put the brakes on just a moment and do not let your panties get in a bunch. This is a pullback, or this is merely a price adjustment to accommodate for the spike in interest rates we've seen lately. So why would I say that? Well, let me explain. First, we're in a big, booming bull market, right? A lot of the stocks in this bull market, they sell bonds, right? That's debt. Well, when they sell bonds, they take the money and they buy back their own stock, which means a lot of the price in this stock basically has high debt involved in it, right? So the really, really low interest rates has pushed stock prices up. They sell bonds off their own companies, corporate bonds. Then they buy their own stock with it. If interest rates move, these companies feel it. Like that, kids, that is no joke. So that's why if interest rates move a little, especially these days with so many corporate buybacks, and they're borrowing money to buy back in many cases, the money's cheap, no problem with that, but that's the stance that they're in right now. So if interest rates wiggle, believe me, stocks are going to feel it, but stocks just need to do a readjustment to accommodate for the higher interest rates, and then probably right back up we go. For now, I am calling for the downside. You see all the reasons why. Remember, the flat tops and the capitulation-looking chart formations, they don't show up in bull markets. You know what I'm saying? So we're definitely coming back, some kind of a pullback again, and a price adjustment in the market to accommodate, but we'll see. In fact, I want to show you the charts. Traders, I got an OMNI coming. OMNI is coming soon. The fantastic calls I show you in these videos, how could you not want to come out to OMNI? April 29th is a 4-day OMNI held here in Las Vegas, live with me. You will be in my home office. So, I want you to fill out applications. As the applications come in, I plow through them. Half of them I toss in the garbage. The other half I call. And if I don't like you on the phone, you're not coming out for 4 days, I'll tell you that right now. So each one of you, I have to, I call you guys up and we talk a little bit. And if we get along well on the phone, the likelihood is you'll be approved for one of the seats. I only have 3 seats I ever open up lately. Since COVID, 3 seats only at each Omni camp. So this is very exclusive. If you would like to join me and learn the Omni, and the Omni is Oscar's market navigational indicator. If you'd like to learn that for yourselves, how I make these great calls, make sure you call me 702-629-4755. Come to Live with Oscar and fill out your OmniCamp applications there. Or go to OMNIBootCamp.com and fill out one of those applications. There's many ways to let me know you're interested in camp. Make sure you do that. It's coming August 29th. Oh, excuse me. It's coming April 29th. Time is ticking. With no further ado, let's go look at some charts. Traders, bonds, daily bar chart. I mean, I don't even think I need to say anything, right? Look at all these crackdowns, these weird channels or flags that get made, and down, down, down. Now we're really starting to run. Bonds, when they move down, you know that interest rates go up all by themselves. Forget about Powell, forget about the Fed. The bonds moving down makes interest rates go higher. Now, I've shown you this chart in many videos already. This is a weekly chart of bonds. So each one of these lines represents an entire week's worth of trading. For years, the bonds were going up. When bonds go up, interest rates go down, money's cheap, the world is wonderful, stocks go up, hallelujah, everything is great. Well, we had what I call capitulation, or a blow off top. Look at that crazy run-up bar back down, and what happens next? A bear market in bonds begins. Now, this is over a year and 2 months of almost straight down in bonds, which means now interest rates have been going up. Now, bonds reaches the 200 bar moving average on the weekly, right here. It does not go below the 200, kids. If it breaks below the 200, we've got a problem. So that is a look at capitulation, and look at something like Tesla, which is a major component in the stock market these days. And you know Tesla's got a lot of debt because they buy their own shares, and those shares, they have to borrow money to buy them. So if interest rates move, the stock is going to feel it. I came out with the video when we were about here, and I said Tesla is getting very testy to me, kids. Boom, we cracked. Since then, capitulation day takes place. All the way up to here, the market goes in one day. Comes back down, and this is the next bar. Now you're below the 50 bar moving average. So I think the interest rates rising, the way bonds are dropping, things are starting to get forced on the charts, which they're, if you ask us, they're clues or signs for what's coming next. So you saw that capitulation in bonds, and then the bear market started. Capitulation just took place in Tesla, which of course is connected to bonds due to interest rates. And now it looks like something on the bear side starting since that capitulation day yesterday. Flat tops produce market drops. Kids, tell me that wasn't just fantastic. So I did the video, showed you the flat top. Since I showed you the flat top, boom, boom. Flat tops produce market drops. We're also now below the 50 bar moving average. Trouble ahead, we're out of this wonderful channel. Below it, 50 bar moving average, we're below it. This could easily be construed as a bear flag, which just broke. That doesn't look good. As far as short-term trading is concerned, the next few days, I don't like that. The Dow Jones Transportation Average has joined the flat top parade, and it paid off already. Flat top as of Wednesday's close into Thursday morning, and Thursday morning the flat top pays off. So you're getting technical formations now that show you the market has to go lower. I assure you it's because interest rates have just moved. The Russell 2000. Now, for this I want to give you my lovely voice. Are you ready for it, kids? One of these things is not like the other. One of these things just doesn't belong. Can you figure out which shape is not like the other here, kids? Which one do you think is different? You stayed in the channel, in the channel, in the channel, circle, 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 circle. Look at this. Oops. Fell out of the channel, below the 50 bar moving average. That does not look good. These holds were fantastic each time the market held here. Great holds each time. Not anymore. You are now outside of the channel or the support line. So that's not good. That's your Russell. This is short-term trading. Don't forget, trading for Friday. E-mini S&P daily bar below the 50 bar moving average. Now you are down, settled below this channel. That, if you ask me, doesn't bode well for a strong Friday. Apple now. Apple is a component of the stock market, right? Well, look at my OMNI average in Apple. Do not get below it. Do not get below it for more than a couple of days. Do not get below it for more than a couple of days. Uh-oh. Oh my, look here. Not only are we below it for many days, we're below it and we built a bear flag right below it and cracked out of the bear flag on Thursday. That, my friends, a huge component to the stock market. That doesn't look healthy for me for trading on Friday. Facebook, another huge component to the stock market. Bear flag, you are below the OMNI average. Built a flag pole, turned into a bear flag. Most of it is now starting to hang around or at the 200 bar moving average. That should produce a down move. The street knows, generally you hold the 200, but look what's happening here. See all of this? So I'm not so sure. This time around, Facebook holds the 200. That's not going to help anybody. Amazon, another major component to the stock market, below the OMNI, broken down through this wonderful pennant with the false breakout, no less, to show you the downside's real. Then you broke out of the downside, and now you are well below the 200 bar moving average. That, my friends, does not bode well for the market itself for short term. And while all of that is happening, look at the madness here. This is no good, traders. Crude oil moving like this equals inflation. This is not good. More about this at livewithoscar.com. Join me in my free live trading room.